Okay, so we are going to talk today about digital assets platform and custody, and I have here with me four experts on the subject, and I will give you the space to sort of introduce yourself and the organization you're working with. Just one disclaimer. Any statements I make for myself and not for EY IFB, unless a moderator should not make much statements, but maybe there is a statement in my question. And I think it's true for you too, for all of you, but please start with the introduction.
Hello, my name is Schlaberg. I worked for 10 years in consultancy, 10 years in investment banking, and spent the last 10 years in a board of different banks. And we are currently developing a company which will do crypto-backed lending in Germany.
Hi, my name is Thomas Langbein. I'm responsible for sales and strategic partnerships at Trever. At Trever, we provide what we call a digital asset management system, providing or enabling banks and other institutions to have access to the digital asset market, including trading venues, custody, and all the settlement you need, including the bookkeeping for the end clients. Yeah, happy to be on this panel and discuss latest developments and what will be next in this market.
Hello from my side. Thanks for staying, even though lunch is already served. My name is Robert. I'm the commercial director for Bitpanda Technology Solutions. We are an infrastructure provider, or rather investment as a service provider in the digital asset infrastructure system, giving banks the back end to the entrance portal to this new kind of technology products. And yeah, happy to be here today.
Hi, my name is Roger. Managing Director of DLT Finance Group. We are BaFin-regulated broker-dealers, so we trade cryptos mainly for our customers, and we are also BaFin-regulated custodian. And our platform provides direct access for banks and regulated counterparts, financial institutions, to the world of crypto in a fully regulated way.
Okay, thank you for the introduction. There's one missing, Mark from Florian. He is on the way. I have a small application here. It's tokenized my panelists, so I can see where they are. He's just landed in Frankfurt, and I see it's not only the location, it's the health. He's fine, and I see you're all very excited, so let's just jump in with the digital custody projected to evolve in the upcoming months and years. What do you see there? Are the catalysts that underpin growth and adoption, or and technology-wise, is there a leap, or do we see a kind of platform that we reached, that a kind of base camp, or are we already on the top of everything, or do you see other improvements in experience, user experience, and risk management? It's a lot of things, but I think you have the intellectual capacity to address this. Please.
I'll try. I'm not sure if I manage. I don't think that there will be significant technology changes in the custodian business in the next couple of years. What will happen is that the market will increase dramatically. So first of all, I think the numbers of investors will increase. First retail, but also institutional investors. Secondly, I think that the prices for Bitcoin, Ethers, and the like will go up in the next couple of years. So that will increase the revenue potential of custodian business as well. And I think the most significant trend will be a trend towards the regulated part of the industry. What we've seen in the last couple of years, I think, is that every time when a non-regulated player like FTX or also Genesis went into bankruptcy, that there was a very big inflow in the regulated part of the industry. And I think that will dramatically increase over the next couple of 3 years, especially because of NICA and the regulation framework we have right now. So at the moment, I would expect that the part, let's say the market share of regulated custodians in Germany is roughly 5 or 10%, and that will triple within the next 3 to 4 years. So I guess that's one big trend, and the other big trend will be that the regulated player, or also every custodian, will try to increase profitability. I think the industry profitability in Germany is below 0 at the moment. That's because it's a scale business, and we have a lot of fragmented players or smaller players. And so therefore there will be a trend toward consolidation, I think. New players like Bitco, Deutsche, Kuba will enter the market. So I guess it will be an M&A process within the industry. And also the second thing what I think will happen is that players will offer more product bundles. At the moment, as I said, with provisions from custodian business, you can't make any money. But if you add staking, if you add crypto-backed lending, if you add insurance policies, etc., or trading, I guess then we have a bundle of products which will make the industry profitable. So I guess there are the major trends, and that's why I don't see any technology changes. I think there are more changes in the industry and in the competitive area than the technology. That's from a banker's perspective.
Yeah, maybe I can continue or add a few words here. I agree, we see a lot of, I think, market developments in the last months or in the last 2 years, I would say, because we not only have, I mean, in the digital assets area, the crypto market, which started like a few years ago, and which was, I think, the first part which was really in the focus of the market players, of the investors. We now also get more and more involved into digital assets in a broader sense, digital securities, meaning securities after EWPG in Germany or after other regulations which give a frame here and which makes it more interesting and attractive for institutional investors as well. So going into that space, many banks now, I think, find out what will be one of the first steps I have to think about when entering this is, of course, the question how to safely store those assets in a safe custody environment. So that's, of course, in my opinion, a part which drives within the last months or years the adoption of especially the custody part of the digital asset ecosystem to find solutions there. And I'm sure within the next months we will see many more banks or many more traditional institutional players as well entering the space and coming out with own solutions maybe because they would like to be, they see it as a core part of their business to provide here a solution for their clients and to be in the space quite early as one of the first. And this is also the basis for other use cases in that space. So when they establish the custody solution, they are able to settle on top other use cases for their clients and for the market as well. That's what I think will drive the adoption in the next months.
Yeah, so maybe also on the perspective that you just guys mentioned already, everybody is talking about MiCA. So we are on the forefront in Europe when it comes to regulation, when it comes to security in that sense of what is in the future, what can be done, what do I need to do. And if we look at how to get a MiCA regulation, you already need to showcase to the regulator how is the technical setup going to work. So you need to even start now to set things up, to set the stage of actually receiving such a license, and you need to figure out, do I want to build or do I want to buy? We are in the beautiful situation right now that we have in the market multiple providers of giving such a solution as a possibility. You can still, as always, build it yourself. It's just a time frame and a cost figure that you need to think about. And then in the end, what is the most important thing driving this entire situation, as you mentioned, is the scalability. So I need to have a solution that is scalable. I need to have something, even I don't know what the future will bring, but my solution we just heard in the panel before isn't supposed to be a small block that I build once and then if something else comes up, I need to start building again. So you need to have this scalability option within. That is something that leads to investors, that leads to corporate business joining this entire course. And I think that is also driving the adoption rate. And as in your question, the plateau, I believe technology-wise on the custody space, I think we have a good setup, we have a stable setup that can be used and that will be adopted. And furthermore, maybe there will come something along, but I think we are well set right now when it comes to technology.
After FTX last year, we saw, especially on our house, a massive increase in demand for regulated services. And I'm with you, with all of you, as you mentioned, on the technology side, I don't think there will be any major changes. But what we see actually is that the professionalism is more in coming back to the, let's say, banking standards. So we see a lot of demand from banks. We are dealing with flow fund trusts, that they require risk analysis, that they require a lot of additional services on a platform base. So starting with different roles for users, coming from compliance, from trading. This is something which comes from the traditional finance side, and we definitely see the requirements from the institution now, not just preparing some fancy trading stuff or custody stuff, but to make it compliant with all the regulations and all the requirements which you can use at the end, and not only for cryptos, but as well for tokenized securities or other asset classes. And I think this is something where we will see in the future a big demand coming in. And as you mentioned as well, tokenized securities will be one of the topics which will come in. At the moment, I think it's early stage. So we see Vonovia Anleihe and things like that we had in the past, which is obviously only, let's say, a kind of a test if everything works well. But there's no really demand on it. But furthermore, there will be coming additional players stepping into this business. And quite interesting, as you mentioned, with custody, you don't make money. I'm with you. That's why we decided also to build up a whole infrastructure on it and not just focusing on the custody part. And given the fact that we also see now increasing interest rates, we will also be comparable to the traditional finance side. We're talking about staking and trading and all these asset classes being more in a pool. So it's not even more segregated that you have traditional finance and you have cryptos. It will be a mix of it, and we will see also in the future players from the traditional finance side stepping into the crypto parts, but as well also from the crypto part stepping into the traditional finance side, as we see also with players like Bitpanda, for example.
Yeah, thank you. Last weekend there was Rugby World Cup, the quarterfinals. I don't know if anybody has the opportunity to look at it. It was really great games and very unexpected. The Europeans were dreaming of a Northern Hemisphere final, which is not going to happen because France and Ireland, the two top teams of the world, have been out in the quarterfinal. And now the question to you, taking this, do you see anything unexpected happening in the digital security or tokenized asset area now in the upcoming months, in the short term? Maybe you start again.
I think it's not that we see some major changes coming in within the next months. It's a development, what we see, and it's coming. It's mainly driven by the regulation so far, and this is also where I see the future in this business field. So there will be additional services being adapted into custody, so as mentioned, staking and trading activities. But in the general, I think it's a process which will take even a couple of years until it's being established and comparable to what we see on the traditional finance side, if you compare it with Citadel or Euroclear as a big CCPs. And yeah, but it's interesting to see what your view is. I mean, you're more related to the traditional finance side, regulation. So that's, in my eyes, comparable, but quite interesting to see your point of view.
Exactly, and I would also add to this, we talked about unexpected and what can we not foresee yet, but I believe that we're talking a lot about securities and tokenization right now. I think what people will start to realize is where's the feasibility in this. So can I even make money with this? Is this just an internal optimization case? Has the end user any benefit of it? Does he actually realize that it's a tokenized asset between the differences? So I think it's great to talk about this. It's great in the adoption, but I think what banks and every other player will realize in the end is it really a feasible case that we are talking here? It's great, it's interesting, it even sounds cool. We can go to the press, make marketing, and be upfront in the bank. We've seen that, but when will it be live? We'll talk a lot about this, but I have not seen anybody actually doing it right now in a mass market situation. We have seen tokenization, but between institutions, there's no real retail use case yet. I think we will get there, But I think it will be a long way, and it will be a hard way, and we will lose some of the players in the way to get there. So I think the unforeseeable thing is that actually the economics behind it will be interesting to see. I don't know if you guys have a meaning to that.
Shall I continue with my opinion? Yeah, I mean, if I remember back like 2 years, we often heard there's no regulation in that space, so we are not sure what are we allowed to do and what not from an investor perspective. I think this will be now much more clearer since we have different kind of regulative initiatives within the last months. We've seen that in Germany, but on EU level as well. But it not only, I think, enables institutionals to invest there, but also enables a new kind of business models to evolve there, like crypto registrars, which can play now an important role in this new infrastructure in the market, or for example, like tokenization providers, tokenizing the assets from a technical perspective. So that's what I expect in the next months will come, what we will see more and more, also as a result of this kind of regulatory initiatives-driven environment here.
Okay, maybe I'm the most skeptical one here. For me, tokenization of assets is a great idea, but let's say it doesn't happen so far. Why is that? I think the biggest disappointment is that we don't have a efficient secondary market. And without an efficient secondary market, it's nice to tokenize assets, it's a cool marketing game, but that's basically it, or it's a little bit try, let's test the technology, etc., pp., but it does not create value. And I think the market will be fantastic and will grow very, very, very strongly as soon as we do have a secondary market. So therefore, for the next couple of months, I would not expect a significant change because that will not exist. But I would expect that some of the larger banks or players will use the digitalization of securities and tokenizing of assets when it comes to cost-cutting projects. So when it's more efficient to digitalize assets in order to reduce trading costs or custodian costs.
Yeah, I'm completely with you. So we had also some requests in terms of tokenize old-timers or Van Goghs or whatever. So the point is it's possible to do it out of a technical point, but nevertheless they are always asking about the secondary market. So could you provide as well liquidity on the secondary market for it? I mean, a Van Gogh won't be more liquid even if you tokenize it or not. Yeah, so that's I mean, with art it's okay, but if you do it on other, let's say, secondary markets, where you have less liquid underlyings, it won't be more efficient even if you just tokenize it. So it's a misunderstanding of some of the players actually in the market.
I think the business is driven by technology, but technology is not solving illiquidity. But I think the technology inspired us to think creatively about the things, and sometimes business can change due to that. Now, I don't know whether you come across Disney has yesterday its 100th anniversary, and they are great in storytelling and making fairy tales, and this gives over now with projects and companies what you expect to leverage. It's not that you should tell fairy tales, maybe some war stories that you can share with how to leverage the platforms now in the foreseeable, maybe 1 year time. If there are any stories and fairy tales, please be free to make up.
All right, maybe let's start from direct out of the market. So we're talking digital assets. So we know there are multiple ways of what digital assets can be. So from cryptos to securities to tokenized assets. And we do see a lot of movement. We do see a lot of adoption happening. We see traditional banks moving in that direction. Some are just announcing, others are already implementing, others are already going live. So we have seen, for example, with VBank, the first private bank in Germany offering cryptocurrencies now to their retail users, high wealth individuals. We see a Raiffeisen Bank in Austria going live with the crypto offering, also stock offering in that regards on a digital asset platform to their retail customers. We will see the first corporate banks moving in that direction. So we do see a lot of traction in the market, which is driven by already proven setups. So which is driven by partnerships and driven by digital assets that are not tokenized in this regard. So where we have already seen that there is market value behind it. And based on this technology and on this fundamental layer of custody, which I said in the beginning, you need the scalability, then you can still explore and then you can build up knowledge. And that is going to be the key also going forward. And because right now, if I look at banks and players in the financial industry, who has that knowledge, who can build something like this out of the pocket, who has the resources for that even, you know, if you look at the pricing, how much it costs. But you can you can bridge that gap by using somebody else, build up that knowledge, and then still decide if I want to do it on my own, I can still do it. But that is something that gives you time, but you can already see in the market what is happening. So we do see a lot of movement, especially in the German-speaking area. I believe if I look at the entire European Union right now, Germany, Austria, Switzerland, they're on the frontier and moving in that direction. That is great to see.
Thomas, you would like to? Oh,
yeah, maybe I just jump in.
Okay, sure.
I'm completely with you. On a product side, I think it will be a mixture of the traditional side and the new asset classes. And we see also a lot of requests coming into derivatives, for example, on cryptos, but also to bridge the gap to tokenized equity or other traditional asset classes. So on the product side, I think there will be also a development and a change. I think what's most important is the regulation, and this is something where I see Europe or Germany taking an advantage, especially if it comes to US or cross-border. And this will something, over the next, let's say, 20 months or 18 months until MiCA goes live, where we see a lot of changes also in the environment, in the regulatory environment in Europe.
Yeah, I mean, I agree that the regulation is really fostering those developments and giving a secure frame. And what we also heard and agree is that from a technical perspective, we made lots of progress in the last months. So for me, the question is, why are we still that early in the market? And I mean, in my opinion, we are still early because there are just a few, POCs or like single projects going on in different banks, which is great, but which does not mean adoption at all or mass adoption at all, in my opinion. So the question is, why is that? I mean, we have the regulatory frame now, we have the tech behind, and what we often hear, and I agree, is there's still no secondary market. But this is a kind of hand and egg problem, in my opinion, because the question is what has to be there first? What is the first step, right? And to foster the adoption. And what I think is everything or every platform, every solution that makes it more convenient and easier to access that space. It makes it, from a user experience, more attractive to go into this and to understand what do I have to do as a bank, for example, to invest or to tokenize something without having to deep dive into tech stuff and blockchain and everything. Because I also agree, I'm not doing this just because I would like to do something on blockchain. I would like to see a real advantage. Either is it lower cost or higher efficiency or higher speed and so on. And every platform that's enabling this, I think, will be playing an important role within the next months.
Yeah, maybe to add another perspective, I completely agree with what you said. I think the innovation driver will not be the big banks in the future, because they focus on things like, well, how can I manage the changes in interest rates? How can I manage my DPA? How can I manage my credit portfolio in the recession? And crypto is just an option for them, not more, not less, but it will not drive their profitability. Whereas for players like Bitpanda, for example, or for, let's say, N26 or maybe also Baader Bank, it could be a very, very, very solid focus for the future profitability. So I think innovation comes from smaller players, not from the established banks. Also, those two will merge over the long run. And I also agree that I think the regulatory framework we have in Germany is a clear competitive advantage. I mean, it's really unusual to say that regulation is an advantage, but I think here it gives planning stability and a solid fundament for business decisions. And in the US, you can see that the SEC is, let's say, very flexible in how they manage their regulatory framework. And I would assume that that will lead to a big inflow of crypto assets from the US to Germany and also to Switzerland.
Yeah, I totally agree. I think 5 years ago I never thought about a term like good regulation while I was working with banks. But now, as a kind of an outlook, I'm not placing the question where you would see yourself in 5 years' time. There might be somebody answering, celebrating the 5th anniversary of a stupid moderator question. But maybe if we are getting together here in 5 years' time and we look back in these days, so what you would think, what your opinion would be. These days, Mika is just on the horizon. I mean, crypto winter, is it crypto spring already? Maybe you know this book from a Chinese person called the Three Body Problem. You never know when there is winter and when there is summer, or night and day is coming. Maybe we are in something like that. Maybe we are already in crypto spring and nobody realized it, because we always hear so many things and we see with our clients so many things happening. But okay, now we are in 5 years' time. You look back, what would be the thing that you admire most and what you feared most, or what you are really looking forward to? Please.
I have no clue, honestly.
I also have no clue where we are in 5 years regarding the crypto market, if it's spring or winter or summer or what else. What my hope is, or what I would like to see, is more adoption in the digital security space, because that's more or less independent from the crypto market and enabling much more advantages from a tech and from a process perspective. So hopefully there will be more adoption in 5 years' time when we talking about digital bonds, digital fund shares, digital stocks, bringing really huge potential on the blockchain.
From my side, I would differentiate what use case. So is it a corporate bank, a retail bank? But I would have said usually I should have started earlier. That probably would be my point of view, because even though we are at the frontier right now, as you mentioned, regulatory-wise, everything, we are still moving very slowly. We could have moved a lot quicker right now. And the market is not waiting for anybody. And we know this. And then, as we've seen in the last bull run and the last hype we had with NFTs and everything, then people start waking up and wanting to do something. Now we have the time to actually do something, because the market is slow. It's getting steadier up, but it's slow. But everybody's still waiting for this big boom, and then they're gonna go, let's do something. I think so. We should have started earlier. That would be like my point of view.
If I look back 5 years, I've been asked this question as well. How do you see your position in 5 years' time? Because actually 5 years ago we had been established, and I'm still here. I wear I wear the suit. Now I have a T-shirt, and I'm not at Bahamas, so I have to work still, which is a pity. Obviously, 5 years ago I thought everything will be a major change and the banks will be kicked out and everything will be great and fantastic. Nevertheless, having a look at now, I think it's much better than expected, even if I don't become a millionaire. The regulation is one of the biggest driver over the past years, and I see over the next 5 years we will see more a combination of both worlds, and I see potentially in 5 years Deutsche Bank will still exist, UBS as well, all the big players, but all of them will have an offering in either cryptos or tokenized asset. We will see large players, maybe like Börse, Deutsche Börse or Clearstream, being able not just to focus on their traditional side business, so even more also adapting blockchain technology. And yeah, finally, DLT Finance will be one of the leaders in Europe in commercial banking and trading, custody. Yeah.
Yeah, okay, thank you. Now, who is the brave one who steps with a question from the audience between you and the lunch? Okay, there is a brave one. Okay.
Thank you for the panel so far. It's been quite interesting. There seems to be a consensus amongst all of you that things are moving slowly, right? My perception is, so I work in the regulatory side of crypto. My perception is that last bull market is when we saw a huge amount of inbound interest. And the processes for adopting this interest are the thing that is slow. But the actual implementation of everything is starting to come to fruition. So my real question is, do you think that we do need to wait for some sort of new impetus and new energy to come? Or do you think that actually, potentially, it's the next kind of increase in prices will just be a catalyst for all of the work that has been done in the past, 2 years?
I do not think that we have to wait. I think it's a perfect time to develop things. As you said, Roger, I think now it's the time to build up companies. Now is the time to be ready when the prices go up. We don't need a new impetus. I think we, here in that industry, we have 3 to 4 years time before the large banks move in and before, let's say, crypto and traditional banking will merge. And that is the time which we have as startup companies to develop something which we can bring to the market. So I should definitely not wait.
And additionally to that, you're fully right. I think what we've learned in the last bull market is that you need to strengthen your processes in regards to the sheer amount of requests that come in. So we need to even see more, since the adoption is growing. So even retail market, corporate market, they're all wanting to go in the market. Let's see how if it goes up, then you have to have a solid technology that actually is able to fulfill all these requests. And I think we are in the process of building that. So we are actually moving quickly in that direction, but that is on the technology side, and with the providers of that technology, they are preparing for it. The question is, do the banks actually want to offer it or not? But I think you're correct that we are moving in that direction quick. So the market players that are established, the brokers, they have been doing their homework, preparing. The banks now only need to grab that information and make it their own.
Okay, so we're just in time. Thank you for the brave regulator. A bit postponing the lunch, but nonetheless, nobody's starving. So I will now hand over. I have to thank my panelists for this great discussion, many insights, and it was really hard for me not to step in and bring my own statements. It will be a pleasure to sit with you again on a panel or moderated panel. Thank you very much.